MLN Srinivas says HDFC Short Term Debt Fund is rated as 5-star. It has invested 14% of its assets in AA and lower securities. Is it a safe investment?
HDFC Short Term Debt Fund ranks among the better funds in the short duration category. It takes a measured exposure, it takes a measured approach to credit risk. Of course, it doesn't completely steer clear of lower rated papers, less than top rated papers, but the fund manager always keeps a tight lid on these exposures. That's point number one. Second is that the fund mitigates the risk of investing in slightly lower rated papers by always maintaining a very high degree of diversification at the issuer level. The third point in favor of HDFC short-term funds is its ultra low expense ratio in the context of the category and its peers. So on all these measures, it comes across as a good fund. Its fund manager, Anil Bamboli, has been in charge of this fund for over a decade now, and he has done a fine job with this fund. And that reflects in its high rating, which is it has been able to maintain consistently. Now, of course, you can find other short duration funds which are managed more conservatively, but remember they would also yield lower returns given the conservatism. This fund tries to balance risk and returns in a fine way. So while it takes a little bit of credit risk, but as I mentioned, it is always in a measured dose. And therefore, we believe that if your investment horizon is 2 to 3 years or more for your core fixed income allocation, it's a worthy fund to consider.